on the first day of July 2017. This is This Week in Economics from WBRN Radio in Boston and over the Bostonred Network numbers, man, here. We'll start this off. Look at a number of things here today in the old macroeconomic field. We were looking at the proprietary index from the Citigroup called the Success Index. We'll talk about it. And we also picked up a number of things from, and we've used them before, Yardini Research, and they have some interesting things here. And one of those, the labor force participation rate, we've talked about it before. In this space, it's at 62.7. One very interesting thing, and I was thinking about this. The labor force participation rate, do we count undocumented workers in that participation rate? Difficult to say. The historic trends, now this is from the Bureau of Labor Statistics, but nonetheless, I was looking at back to 1948. It was roughly about, let's see, 58, a little over 58, something like about 58.7 or something in that range. That was in 1948, and in the 50s it was moving towards 60%, not quite there. And in, 1950... 456, it was around 60% in the participation rate. Now, it fell in the early 60s to something around 58 point, 58.5 perhaps is where it would be. But nonetheless, I'm just looking at how they're doing this. And we move forward to the 70s. The rate started to climb up. In 78, we were up around 64% labor participation. Now, it really climbed to above 66 to almost 68 in the late 90s. That was the Clinton administration's miracle, if you recall. We had the so-called tech boom, and then it sort of started to go in the other direction. At 62.7% today, and actually was in May of 2017. But if you look at this participation rate, very interesting within itself. It will drop in the coming years because the baby boomers will be exiting the labor market, stage left, and a lot of that will obviously depend upon the baby boomers, the later baby boomers. The rate is retirement age is 66, 67, 68 for the Social Security, depending on whatever else is in the mix. So you'll have some people timing out of there, and that'll be a slower process. But nonetheless, it will be a process in its entirety, so to speak. Let's just look at... we'll do the rig count while we're here. Again, this is from the same people, Yardini Research. So looking at the totals here, 940 of those. And if we looking here to 630, yeah, anyway, that's what we got. And for the petrol part of it, or the oil part, it's 758, and for gas it's 184. So we start looking at some of those rates where they are up, the count is up, and we start looking back, say 2016 it was down where the plunge was in. Look at and what? Roughly about 400 there for it. So the totals were different at that time. And it sort of gives you a little bit of an idea of what's going on. Nonetheless, let's get to the surprise index. We wanted to get to it. This is a Cities Economic Surprise Index. Hit a multi-year low on Thursday. This article is dated on the 23rd of June, so it's a little bit dated, but nonetheless, the index is widely followed as an indicator of economic data, how economic data are matching with expectations. In fact, it's hit the lowest level since 2011. Washington Crossing advises urged investors to start protecting their portfolio. That is from Morgan Lander, Chad Morgan Lander. He's with that organization. In light of deceleration of growth. Now, this was on CNBC's Trading Nation. We believe will happen over the course of the next 6 months. Next 6 months are crucial in the economic spheres as far as the U.S. economy is concerned. It doesn't mean it will result in a scare or a recession. Well, the problem is here that you have these economies. A lot of that would depend on what financial or economic programs the Trump administration puts forward. Now, they've done some small things, such as saving a few jobs here, losing a few jobs there, but that is minimal. One of the big items coming up would be the debt ceiling. Will they be able to deal with the debt ceiling, or will they go the way of Maine? On the page there, they have a partial shutdown of state services there in Maine. One of the problems with these shutdowns, and it's a fairly new phenomenon. If you recall, the Republicans shut it down government in during the Obama administration twice, but the shutting it down is a relatively simple process, but starting it up is not. You have enormous losses to the federal government in terms of tax revenues, productivity, etc., and that will spill, particularly in the Washington, D.C. area, over to the rest of the economy. So it's not something you want to look at. And also on the debt ceiling, that's the full faith and credit of the U.S. Now, that will impact the U.S. dollar, which we'll get to in a minute here, but some people are thinking in terms of the lowering of this index of going as a defensive measure to the dollar. He recommends investors start modeling their equity exposure from overweighted to a more balanced equity exposure in cases the market hits a snag. It also recommends looking at more of a long-term bond portfolio, as you see the yield curve flattening out more in the next 3 to 4 months. In the event the index continues to set at such low levels, another person here from iTrades, Bill Bosch, suggests that this would be the right time to buy the dollar. According to Bosch, the index falls down into the mid-40s percentage to the 60s area, just slightly lower than its current level. You want to buy dollars as an indication of a rally. Now, hard data has been just about as awful. The Fed has been positive over the last few weeks, been very hawkish, and they've really gotten the dollar to try to bottom. Trading Nation, if the hard data comes around, the dollar index is about at 2%. Now, dollar in fact has dropped almost 5%. In other words, it's basically, you didn't see this at one time, but it's basically even with cities index. So in other words, both indexes are down, and part of the reason here is the business atmosphere in the U.S. As far as the governmental approach is dismal. We have the nation's healthcare, which is 1/3 of the economy, in tatters at this point in time. No matter what happens, the debate now is around 22 million people being forced to forego their health care, being was dropped from the proverbial roll by 2026. But that doesn't matter as much as, in other words, this figure in the head of 22 million. It could be 1 million, could be 500,000. The damage would be done because it has a ripple effect. The whole thing centers around Medicaid, which is a government program for low-income people, the poor, low-income people, etc. It has been expanded, eligibility expanded to working families, working poor. The income levels are totally different now for that program than at one time. So in other words, migrating more to a national health care program for many people that are affected. But the largest effect is with senior citizens that are housed in what is normally called senior citizen homes, nursing homes, as Bill Clinton used to say, old people's homes, etc. Of course, now he's getting closer to going there. I think he's changed it now to alternative living or senior living. But nonetheless, that is the engine there that, as they say, powers the fuel that powers the engine. Get it right, almost like a German thinking about Helmut Kohl. But anyway, the situation is that that is very important. Also, the healthcare infrastructure in rural America and somewhat in urban America, but particularly in rural America. So these are things that upset the apple cart. And as far as this bill is all about quote-unquote tax relief for upper income voters, which normally called the rich, that is one of the big challenges there. And then, of course, you have the budget to take care of itself. This is a reconciliation, the way they're doing that, a budgetary matter, so it is seen, the Better Healthcare Act is seen as what the Republicans have decided to label it, but in the polling it doesn't look very good. In fact, the Republicans are at log jammers on it, and that's one of the things that's weighting down on the dollar, particularly if the debt ceiling is not passed, and that in itself will take on similar arguments. The conservatives want a debt ceiling, others do not want the debt ceiling, so we'll get into those things that have not really been in it. At one time, the Fed was the sole manager of what we call macroeconomics, and basically it is, but it's more, it is the game in town. It's not creating a few jobs here, 100,000 jobs there, because we have to look at how they would be, quote-unquote, sustained in that particular kind of atmosphere. And that is where there are enormous problems that are now being seen out here. Very little can be done about it. This came from Reuters, and this is for all's well for the world economy mid-year up to this point. The world economy is moving along. There's a strong belief in growth momentum. It's on a global economy. We'll call it global economy. Has been reached cycles where data not meeting expectations are dismissed as outliers. Well, the Flash Purchase Managers Index for service in Europe for June, we did that on last week's show, for example, were weaker than anyone at Reuters had expected. Well, you expect this to happen. You have Britsik and various other things. There, in all of the best worlds, it said based upon what seems to be a majority view among policymakers, economists, the world is enjoying a broad expansion. Well, that is correct, but at the same time, if you look at it dialectically, for each expansion, there's also a contraction. So those are some of the problems that you have, and you have to face that. And I was just looking at a definition here. Of Pangrossium. I hope I pronounced it correctly. We'll see. Panglossium. Okay. Well, the Reuters article referred to it, so they call it economic Panglossianism. All of the best in the world, of all worlds, in other words, a little of each. Faster growth this year reflects a synchronization of improvements across the advanced and emerging markets. That is from the Finch people, Brian Colton. He's the chief economist, wrote in an Outlook projection. In 2007 would be the fastest world growth, about 2.3% since 2010. That's when coming out of the Depression. Backing up this view, central banks in the Eurozone towards tightening a base with a mixture of signals as to when. Anyway, the financial markets are now priced in a 90% chance of Eurozone rates being hiked in July of next year, no doubt. The Federal Reserve is thinking about at least one more hike. We at this mic think there should be 2 hikes at least. Some there, and first there's some sign of a dip in economic activity. While inflation remains, but there's a dip that will take off inflation. So in other words, you're back to the best of all worlds. The term progressivism has come here anyway. So this is where we got introduced to the Citibank Surprise Index, negative level around 60 since 2011. Real U.S. gross domestic product has been increasing, but at a slower pace, at 1.4 from January to March. A report from the Atlanta Fed suggests the second quarter will bounce back, but as a result of strong housing sales, a reflection of cheaper money, offsetting a sluggish equipment and inventory development. Durable goods declined sharply. Job growth slowed at the last reading. The Eurozone, the current, 1.9% year over year, a little better shape than the American economy. Job rate is lower, but still above a 9%, a jobless rate, and above 9% there. But 9% there is a little bit different than in some places. China, meanwhile, has avoided a slowdown. Some feared. The Chinese have a different system. The quickest pace in growth in 3 months, in June. But an official crackdown on excess debt, shadow banking, is something they should look at here, by the Chinese Communist Party. Japan, the government has raised its overall view of the economy because of growth in private consumption, but the latest data, of course, says a little bit is less than expected. And, of course, in Britain, Brexit is coming in there, an unexpected situation. One of the problems with that particular chapter in British history is that the EU is going to be very hard negotiating, and loss of jobs have already started in the United Kingdom. And the United Kingdom had a very tenuous economy at best. The Tories have increased debt there. They have decreased revenue, strain on the rich in the UK. Mixed signals here. That's chief economist Deutsche Bank wrote to clients. They reflect a momentum, softening in the margins, but still robust. Now, this is and certain enough uncertainty exists for the Bank of International Settlements. We've talked about them. The banker's central bank to warn risks ahead from turning financial cycles, unmanageable household debt, and weak productivity. Well, a lot of the weak productivity is many of the workforces in many of these nations are not matched to the type of economy that they want to go to. The Full Purchase and Managed Index and its equivalents, such as Japan's Tanka, will show whether manufacturing and service growth is keeping up with expectations or succumbing to mild slowdowns. In Germany, France, Britain also released their numbers, and we'll get those. Finally, the end of the week brings the U.S. non-farm payroll data for June. The number of new jobs is expected to rise from February, and I guess we'll get that on Monday. The G20 will be meeting in Berlin. That'll be an interesting meeting there in Berlin, and we'll see how things are in Berlin. Let's just take a quick look at the Tanka. I don't think they released anything. This is from the Bank of Japan, and I'm not thinking they have anything up here, but we always want to look at these things. Let's see when they have their next release. Well, we've already had it. That was in March, so I guess we're not going to be seeing anything from them for some time to come. Let me go to the BBC here. Well, let's do India. India sweeping tax reform, they call it. They introduced a GST. You probably won't hear about it, although it's a very large economy. It will replace numerous federal and state taxes with the goods and service tax. That's what it's called. Historic overhaul there. Businesses have been asking from time to improve and implement changes, and some don't have the computer mechanisms employed at this time. On a new system, goods and services will be taxed on a 4 basic rates: 5%, 12%, 18%, and 28%. Vegetables and milk are exempted from it, but still subject to some existing taxes. And of course, India being a very large economy, you'll have some of that going on. I thought we would sort of a little out of the way thing here, but the Bitcoms are now being accepted at some schools in New York. A Montessori school will take Bitcoms, relatively small schools, but nonetheless they will be taking Bitcoms, discount of a hefty, parents who invest early and have ridden the currency rise, you get something like a discount on the school's hefty $31,000 tuition. So that is for the who looked at Lloyd's, one of the old line banking industries in the UK, missed its own compensation deadline. Victims of $1 billion fraud that was at HBOS criticized Lloyd's banking group for failing to meet its own deadlines. However, only a fraction of the £100 million it set aside had been paid out. Lloyd's bought HBOS in 2009 during the Depression. So that is where Lloyd stands. Lloyd said there are 67 business owners if it knows to be implicated in it. Anyway, this is a scandal, British only scandal, I guess you'd call it. And let me see how we're doing on time here. We didn't have any PMIs this time around, but we will get some later. In the U.S., we have the Independence Day holiday, which is sort of on Tuesday. I would think it was a Monday holiday, but it will be on Tuesday. Of course, everything will be closed down. It'll be important to look at it in terms of gasoline or petrol prices. I've been looking around a little bit. Haven't seen any increases. This is the summer driving season, and people start their holiday adventures across the U.S. as in many other places. Of course, if you're in Argentina, you're in the winter. And in Australia, very interesting, people run around in pockets. Whereas here across the country, they are in better regalia, let's just say that. Let me see if I can find our spread here. We're spreading all over the place. And where are we? Oh, we don't want to forget Warren Buffett. Warren Buffett is at it again with Berkshire Hathaway. He is the biggest shareholder in Bank of America, that is in North Carolina. On Friday, to acquire 700 million shares of the second largest bank, that's Bank of America. Buffett bought it during the Depression, will take roughly 7% ownership stake. That's worth about $17 billion based on Bank of America's closing price of $24.32. The transaction will make Bank of America one of Berkshire Hathaway's largest equity investors, joining Apple, Coca-Cola, and Wells, the nation's third largest bank. It was made possible by Bank of America's decision to boost its quarterly dividend to 12 cents per share from 7.5 cents after passing the Federal Reserve's stress test. Shares were up 16 cents to $2.48. Berkshire will exercise warrants to acquire the $7 million. It will swap $5 billion of Bank of America's preferred shares he had bought during the Depression 2011 for common stock in a cash-free exchange. Berkshire is setting on roughly $12 billion paper profit because Bank of America's stock price has more than tripled on the $7.14 warrants there. Berkshire is the largest shareholder in Wells, which sends Buffett close to $800 million of annual dividend there. So in other words, I guess the secret here is get into stocks that offer dividends. The bank was only about midway through a multi-year process to clean up. They had countrywide financial corporation Merrill Lynch. The process cost more than $70 billion. Bank of America's current largest stockholder is the Vanguard Group. I didn't know that. Who owns 652.4 million shares, and they're at a 6.6% rate there. So this is some of what is going on. We didn't want to leave anyone out here, and make sure that we've got everyone that we need to get. U.S. big banks picked their results into one day. 7 U.S. banks expect to report on their earnings the same day. On Friday, Barclays reported that 10 of 19 large banks by market value reporting results in just 2 days next month, the 14th and 21st. They haven't reported as of yet, but the analysts expect prod through more than 200-page press releases from J.P. Morgan, Citigroup, Wells, PNC, that's out in Ohio, First Republic, etc. So we'll have some interesting data there. We were looking at this sort of an interesting little thing here. High-tech dashboards, that's in your automobile, motor car, whatever you want to call it. The instrument panel on your new car. You may find chic digital gadgets, multicolored screens, and an automobile supplier there, Visron. And Visron is one of the new ones. The stake price is the 237 billion cockpit electronics market. Didn't know that. That is from IHS Market. We use them all the time, which has doubled to 62. It will double by 2022, 62 billion. That's from Price Waterhouse estimates electronics account for 20% of a car's value. And the next year is up from 13% in 2015. So you can kind of see where that is going. The number of suppliers to these components is likely to dwindle as automakers work with a few companies. You'll see more and more of that going on. The complexity of engineering 10 different systems from 10 different suppliers is no longer something an automaker wants. No doubt about that. He estimates the industry will work into 2 or 3 cockpit manufacturers, down from 6 to 10 today. So in other words, you'll see less there, and that will affect, obviously, the jobs market. They are a Detroit-based organization, but they deal in global commerce. The second largest automobile maker there, Dafeng Motors, that's in China. The other one's, of course, Mercedes-Benz. Learned that Mercedes did not respond. Another unnamed automaker plans to use the system in 2018. So what you're seeing here is a lot of these automobile makers, which that industry is a little tenuous in itself. The fact of the matter, I don't like to use that phrase, is that there are more automobile manufacturers than there are automobiles to be sold. The company secured a 1.5 billion in a new business in the first quarter, helped by growth in China, where it doesn't need to go. They need to find other ways of doing things. Major turnaround. It was spinned off from used to be from Ford 10 years ago, and filed for bankruptcy protection during the Depression 2014. Visron bought Johnson Control Systems electronic business, which was developing a master controller. And in March, Samsung completed an $8 billion purchase of entertainment company Harman and a French company. So these are some of the players in here. Last year purchased someone else 20% of Paris-based supplier from Petron Automotive SAS. So you can see some consolidation here, and this is what has been happening, whether it be with Amazon and Whole Foods. That whole retail sector is getting consolidated. We were looking at a note today on NACI, and there, I think we reported on that deal with Amazon to sell direct to the customer. Now on Amazon, you have various third-party types that are authorized and not authorized. We call it the gray market. At least we did in the high tech. So those are some of the things happening, but a lot of this, you should look at it. I remember we were doing sourcing. We were buying computer components, hard drives, cases, etc. We would see that arising, these side deals that were made, and go to Comdex, a big show in Vegas, and you would see all these deals. The deals have disappeared, and most of that, sort of like a shadow banking, has disappeared also. The Amazon, eBay, etc., where components are. Fewer components because there are fewer servers, fewer because of the cloud computing, and fewer desktops, so you have the smartphone, which is commoditized also. And these things bring about an interesting situation. J.D. Power, they study things, found that most complaints from new vehicle owners stem from audio communication, entertainment, and the map-making systems, which will get better as they consolidate some of the operations. Vestron said it's in talks with car makers in China, Europe, etc. This will all consolidate, give an edge over Delphi. I'd heard of them lately. Robert Bosch and Continental and Disso. Now, Delphi has been around a long time, period. So in other words, they're weeding it down to just a few. And that will be basically where that part of the ball game will be heading very, very quickly. Now let's do the numbers. Finally, we were getting ready to do the numbers. Let me see where we are here. Maybe we are doing the numbers. In a minute. Well, not quite there yet. Well. Okay, we need to go back. We are, as they say, not quite there. We have the commodities and didn't have somewhere in our lineup here for a little improvised teleprompt here. Anyway, nonetheless, the BBC Global 30 on Friday. These are Friday unless otherwise noted. Was down 40.33 in London. The FTSE All Share was down 16.43. In Frankfurt, they were down 1.30. In Frankfurt, the DAC was down 91.007. In Paris, they were down 33.63. In Brussels, negative 2.95. In Madrid, they were down 86.60. In Zurich, down there 37.15. In Moscow, they were down 6.32. In Johannesburg, they were also down on Friday, 294.82. In Bombay, in positive territory, 64.009. In Karachi, they were down 146.56. In Lahore, down 45.11. In Colombo, 44.54 in the positive. And in Tehran, they were also in positive territory at 39. In Sydney, on Friday, they were down 32.10. And the Nikkei was down 186.87. And Hang Seng in Hong Kong was down 200.84 in the negative there. And in Shanghai, 4.36 in the positive. In New York, 62.60 in the positive. The Nasdaq was down negative 3.93. The Merck, the Squatties market out in the Midwest city of Chicago, 3.71. In São Paulo, 1,046.17 in the negative, and in Mexico 648.42 in the negative there also. That does it for the market. Let's go on to the commodities. Brent crude futures. Let's see. Okay, Brent crude futures up $1.31 on Friday at $48.94. The spot was down 16 cents at 50.29. West Texas Intermediate crude was up $1.34 at $46.27. T-Boone Pickens jumping for joy there. He remembers $15 barrel oil, which is about where it is now in 1970s dollars. On the Forex, it was down $3.35 at $1,243.25. Dubai Gold futures down $5.70 at $1,244.07. Silver was down 30 cents at $16.47. And your next life futures. What do we have going here? Cocoa was up $42. I guess the candy bar will cost more. And coffee, Robusta coffee is up $34 there. And for anyone I suppose that's into white sugar futures, they were up $4.20. The Bloomberg Commodities Index on Friday at 82.60. It was up $1.27 for all those of great interest there. This will do it for us. So we have a short week next week. The Independence holiday here, and business as usual in the rest of the world. For those in business, make it a productive one. For the consumer, keep your eye on the prize. Petrol prices are not bad in the U.S., so holiday travels will be there. The beginning of the time-honored holiday season in the U.S. going into July and into August, which means there's a lot of not a lot of businesses done at many locations. It used to be at one time, particularly in manufacturing, the automobile sector, whole plants would shutter for that, and then to retool now they just shutter for shuttering. For economic purposes, they haven't heard of any of those, but we'll keep our eye on the prize there, on the rig count, see where all that is going, where the fracking is going. Evidently, the Trump administration opening the Arctic Circle. We have a glut in petrol now, but to pump more petrol, where are these energy plans going? Well, we'll explore those from the macro level. Good day.